Yo, what's going on YouTube? We're actually going over a couple dividend stocks that you should buy and never sell. I've carefully done my research on these stocks, so they have a lot of room to grow their dividend and they can easily afford it. And they do some stock buybacks too. So the first stock we're actually going to be looking at is Johnson & Johnson, for example. It's actually below this, like, in the overall market bottom down here. It's actually below that level right now. So who knew Johnson & Johnson, this dividend king, is at such a steal right now? And it's actually yielding 3.2%. And the dividend growth on this one is insane. We'll quickly look at the dividend growth. Look, went from $1.13 to $1.19. And just from 2020, it was a dollar. So let's dig into the numbers. So for Johnson & Johnson, the leverage ratio looks good, 57%, the same from 1 year ago. And if we go to their operating cash flow, because this is the number we want to look at, this is where they do the dividends and stock buybacks from. It's actually really high in the most recent quarter, $7.49 billion. That's really good. And if we zoom out, that's like the highest it's ever been. So let's see, what are they doing with all that money? How much does their dividend cost them? So their 3.11% dividend yield cost them 2.87 billion dollars, and that's actually down from 1 year ago. Why is it down from 1 year ago? Because they're actually buying back their own stock, and except for the last quarter where they had this like one-time expense, they're always buying back their own stock. So you love to see it. So if we actually go to their total common shares outstanding, 1 year ago it was 2.62, now it's 2.41, which is an 8%. Yo, you basically got a tax-free 8% return. And if you add in the dividends, you basically got a 10% return just from Johnson & Johnson. So you love to see it. I love this one, Dividend King, basically as safe as it can be. So let me know your thoughts on this one. Do you own Johnson & Johnson? I think you should consider it. And hey, also I forgot to mention, I didn't even do like an intro. Make sure you hit that like button for me. Thank you for being here. And let's actually get into the next dividend stock I wanted to show you guys. All right, guys. So for the next stock I actually chose, it's actually a BDC, and they're really cool because just like REITs, they have to pay out 90% of their taxable income. So they usually have those really high dividend yields. And firstly, before I show you the stock, I wanted to show you this ETF. This one's P, or ticker symbol PBDC, and they actually just hold a bunch of different BDCs. Like here's their actual weighting, like Blue Owl Capitals. That's one of the more popular ones. But the one I'm actually going to talk about today is actually ticker symbol BXLS. Look how this one's done. They IPO'd a little over 2 years ago, but check out the dividend. The dividend is 10.11%, and the market cap is $5 billion almost. So let's actually dig into the numbers and see how they're doing. First, I'll actually show you the dividend. They just raised it from 70 cents to 77 cents. So quite the growth over there. So let's actually dig into the numbers. The number we actually want to look at is the operating income. There was the net income, but look, $176 million in the most recent quarter, up 67% from 1 year ago. Gotta love it. And if we go to their assets to liabilities ratio, the ratio is down from 1 year ago, went from 58% to 54%. So you love to see it over there. So let's see how much their dividend actually cost them. So we saw their operating income, and we can see that their dividend actually only cost $106 million. So they can easily afford that. And if we look at the total common shares outstanding, they're actually doing some stock buybacks. So for a stock that yields over 10% and their total common shares outstanding are down 1.68% from 1 year ago, you'd love to see it. It's very rare, and I think everyone will love the high yield on this one. And it's in a sector where they have to pay out 90% of their taxable income. But yeah, let me know your thoughts on this one. I'm really glad I could introduce it to you because I feel like I've never heard this one on YouTube before. I've just never heard anyone talk about it. But yeah, I like introducing y'all to new stocks. So let's actually get into the next dividend stock. All right, guys. So the next dividend stock on the list is actually a REIT. But first, I wanted to show you ticker symbol VNQ. And this is the largest REIT ETF, okay? And let me actually show you the assets under management. They got $28 billion of assets under management. So how did they decide what REITs to pick for their ETF? Well, they just do it by market cap weighting. And the largest REIT by market cap is actually ticker symbol PLD, which is the stock I wanted to show you guys. And it is a steal right now. This is the largest market cap. They have tons of investments, from ETFs and different fund managers, and it's in the S&P 500. So let's dig into why is this falling so much? Why did it fall right here? Of course, there's the high interest rate fears, but the numbers in the most recent quarter were amazing, and the share price is $100. So let's actually dig into it. So we're going to look at their assets to liabilities ratio. It's actually 36%. That's really low for a REIT. So you love to see that. But this is the number we want to look at for REITs because this is what they pay out the dividend from. And it was $1.97 billion, okay? $1.97 billion, all right? And how much does their dividend cost? Only $806 million. So obviously they can easily afford that. And if we actually go to their total common shares outstanding, it's been flat the past year, because they merged with another REIT known as Duke Realty, and that's why their total common shares went up. But it's literally been flat since then, because if we go to their actual issuement retirement of stock, they haven't bought back or issued any shares. The last time they did was way back in 2020, but they haven't ever since. So we can see their plant property and equipment, and went up like crazy when they did the acquisition. But yeah, these guys are just so profitable. The dividend yield right now is 3.46%. And if we go to the actual growth of the dividend, it went from 60 cents or 58 cents now to 87 cents. And they rose it 8 cents in the most recent quarter, I think. So over there with Prologis, you have some really high dividend growth. And a lot of ETFs will have to buy this one because the stocks they pick are by market cap. So this one is the largest market cap REIT, and just REITs have been getting hit in general because of high interest rates. So if you didn't want to actually buy that stock, you could just buy ticker symbol VNQ, which I also think is a steal right now. Hashtag not financial advice, but let's go ahead and dig into the next dividend stock. All right, you guys. So the next dividend stock is actually ticker symbol HSY or Hershey. And I love them because of their brand value. I think their brands like Hershey's and Reese's are going to be here for the next 100 years. And did you know they actually have the color orange on the Reese's package patented? Yeah, literally, you cannot use that color of orange. They will sue you. They literally own this color. So let's actually dig into the financials. As we can see, the stock price hasn't done too good over the past couple weeks and 2 quarters, but let's actually see they're yielding 2.53%. So let's dig into their numbers. And the dividend, they just rose it from $1.03 to $1.19. So that's actually really good growth right there. That's a lot of growth. So let's see how much money they are making. So their leverage ratio went from 71% to 66 while gaining a lot of assets. See, Hershey's is really good. They're smart for that. But this is the number we want to look at right here. So $515 million, all right? So $515 million, and their dividend actually only cost $237 million. And it just went up in the most recent quarter because they just rose the dividend, which is cool to see. So they like to return money to the shareholder. So if we actually go to their issuance retirement of stock program, they usually buy back stock. Like, check out this. They bought back $224 million worth of stock 2 quarters ago. So if we actually go to their total common shares outstanding, it's actually down 0.28% from 1 year ago. So you're not even being diluted. So you'd love to see it. How much cash do they have on hand? Let's find that out. So they have total debt of $4.91 billion dollars, and they have cash on hand of, hey, $471 million. Not bad. So yeah, let me know your thoughts on Hershey's. I like this one because of the brand value and the dividend stats. They're in a good financial situation. They have a healthy balance sheet. So let me know your thoughts on Hershey's, and let's get into the next dividend stock. All right, guys, the next dividend stock on the list is actually ticker symbol IIPR. And if you like high dividend yields, this one you'll really like because it's yielding 10% right now. It is a quarterly payer, but I really like the financials on this one. They have no debt. And I forgot I actually own 3 shares of this in the Weeble portfolio. But anyway, let's dig into the financials because they look really good. So first off, we can look at their assets to liabilities ratio. Basically nothing, 18%. So they have no debt, but this is the number we want to look at. So $61 million, all right? So remember that $61 million, and their dividend only cost them $51 million. So they have room to grow that if they wanted to, and they can definitely afford it. If we go to their total common shares outstanding, they haven't been diluting you. You're only up 0.24% from 1 year ago. So you really like to see it. So you're not getting diluted, and they can easily afford the dividend. If we look at the growth on this one, it's been really good. Now it has stayed at $1.80, but who doesn't like a 10% yield? I think every dividend investor will be happy with it. So yeah, that's ticker symbol IIPR. This one's actually a REIT, so that's why their dividend yield's so high. They got to pay out the 90% of their taxable income. So let me know your thoughts on this one. I wanted to be quick with this one. So if you want to see my full analysis on this one, I'll leave it in a card or linked in at the end screen. But yeah, thank you guys so much for watching. I really would appreciate if you'd hit the like button for me and subscribe if you're new. Also, if you want to see that IIPR analysis, I'll leave it linked up here on the end screen. And I hope you guys have a fantastic rest of your day. My name is Nathan Robert.